How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report that was released February 6, 2018. So here is a snapshot of the positions that the institutions were holding from the US dollar and all the majors. So let's get into gold and see what the institutions have been doing. Alright, so we've been expecting some profit taking to happen on gold, and that's exactly what has finally come into place. Alright, so right here we see that they had 301, then 305,000 positions long, and then we hit an area here, started to show a little bit of pressure, and they closed off from 305 to 298. And now take a look at this drop, right? I told you we're going to see some heavy profit taking. And why were we going to see some heavy profit taking? Well, because the euro was hitting monthly supply, the pound was hitting monthly supply, the US dollar was hitting weekly demand. So when major currencies hit major areas of supply or demand, price shifts. And those are usually areas where we take profits. So we knew that price was going to shift to the downside alongside the US dollar and the euro. So that's exactly what happened. So we got up here and profit taking. So a big drop from 298,000 to 273,000. We take a look at shorts. They also dropped some shorts from 91,000 to 82,000. So take a look here. Even though they're profit taking, okay, the exposure amount has not changed. We're still sitting at 77%. All right, that's because not only did they reduce longs, they've also reduced shorts. All right, so why are they reducing shorts? Well, I think the reason why they're reducing shorts is because they would rather have an overall higher amount of their capital placed with long positions as opposed to short positions. Okay, so let's take a look here. Right here, when the longs were very aggressive, they were 350,000, and shorts were 96,000. All right, and it was 78% exposure. Right now we're at 77, so we can go into the 80s by having this number reach 300,000 long positions, and this number going into the 70s. Alright, so you see how they shift their positions, both the long and the short, to achieve maximum efficiency. I guess you can say it that way. So right now, net positions still sitting at a very positive 190,000. It's down from 207, but that's not such a big deal. And what I am waiting to happen now is for some type of momentum shift to happen, and then a move to the upside. Where is that momentum shift going to happen? It beats me. It could happen from anywhere. It could happen from this weekly 20 EMA, or it can drop right down here to this weekly area of demand, and then we see the move to the upside. All I know is that I'm watching very carefully and waiting for that momentum shift to happen. It may take a week or 2 or 3 or 4, but I am also going to be watching the data here because I want to see what they're going to do. Right now, I see that they're profit taking, and I see that they're reducing their short exposure. So for me, this is a sign that they want to reduce shorts so that they have more overall exposure to the long side. Now I'm just going to be waiting to see when they're going to start buying up again. All right, and as they're starting to buy up, I'm going to look on the daily chart, and I'm going to be looking for momentum shift setups, and then when I get a trade signal, I'm going to place my orders, and away we go. So that's what I see with gold, and that's what I will be doing with gold. So let's go on to the next one. Let's go on to oil. So what do we see with oil? We see that institutions took a little bit of profits, all right, but remember, we're still up here. As we can see, they took a lot of profits. And what have I been saying for the last few weeks, right? Since we were somewhere around here. I was saying you'd have to be crazy to buy right now because we're so overly stretched. 84, look at the coloration of the cells. Look how green it is. We were so overly stretched that it was just a matter of time until they took profits. So we couldn't go long. So just like with gold, I'm waiting for a momentum shift to happen on the daily chart. And then I'm looking for signs of them starting to add long positions again. And then I will jump on board and take, I'll wait for the trade signal to appear. Once that happens, I'll place my orders and jump on board. So overly stretched out. I mean, we're starting to take profits, and long exposure jumps up 1 point. Why? Because they closed more shorts than they did long. All right, so that's pretty much why. So right now we're hitting this area here. We could drop even further. You take a look here. We got a nice monthly bearish engulfing. So we could see price come and test this trend line here, and then some kind of a move to the upside. That's possible. So, so I'll be watching for that momentum shift to happen, and then I'll make my my move. US dollar. So we see a slight decline in long positions from 28,000 to 27,000. And we see shorts declining from 34,000 to 31,000. So we definitely see some profit taking on short positions, which is great. Price has been dropping. We hit weekly area of demand, and we were expecting some profit taking. So this is what's happening here. Closing from 34,000 positions to 31,000 positions, that's definite profit taking right there. So right now, short exposure drops from 55 to 53%. That's due to the profit taking, and net positions drop, but that's normal. Overall, we're still bearish. Okay, the sentiment is still bearish. Now what we got to do is we're looking at the chart, and we're right up about here right now. And my thoughts are this is going to break, and we're going to see a push even higher, and then eventually momentum will shift, and then we'll see a move to the downside. Where that shift's going to happen, I don't know. So I'll be watching the daily chart, and I'll let the charts tell me where it's going to happen. All right. So let's go on to Aussie US dollar. What do we see here? So we see an increase in longs from 63,000 to 68,000, and that comes with this big red candle right here. So price is dropping, and longs are increasing, but at the same time they're also increasing shorts. So why would they do that? Well, this is a different scenario than what we had with the euro and the pound and gold and oil. Okay, and you'll see in the euro and the pound what I'm speaking of. So this scenario is different because with gold and with oil, the institutions were already overly exposed on one direction. And in the case of gold and oil, that was long. They were already very much long, and their positions were already aggressively long. So there is nothing really to do except for take profits, which means close out some long positions and take some profits on those long positions that you've been holding, right? So Aussie's dropping, but we're not seeing any profit taking. Well, we're not seeing any profit taking because there hasn't been a real great amount of longs, of a long position being present. Okay, so yeah, the last few weeks we see 63, 63, 68. But look previous to that, right? Look at the coloration of the cells. Neutral, 38, 38, 45, 52, 50, right? Now, they were very aggressive, and then all of a sudden there was a huge shift to neutral. All right, so neutral, take a look at the coloration. Yes, somewhat neutral with a little tinge of bullishness in there, but more so neutral, right? Even though net positions is in the positive, the sentiment was neutral and is neutral. So price gets up here, it's dropping because the rest of the markets are pulling the market down. But what are they doing as price is dropping? They're adding longs. So what do we normally see when they're adding longs as price drops? So that they don't lose money on those long positions, or better yet, rephrased, they get a better price on these long positions, they're adding shorts as price drops. So if you're adding long here, but you're also adding shorts there, when price drops here, you can close off those short positions, and it's as if you added those long positions at this price. Now, why would you do that instead of waiting for price to drop and then add? Well, because when you are dealing with billions and billions of dollars, your entries can move the markets, and you don't want to be buying and moving the market higher, causing you to have to pay a higher price for it. Ideally, you'd like to be buying and the market dropping so you can continue to buy at cheaper prices, and then eventually when you're done buying, price just moves up. That's ideally what you want. So when they are buying as price is dropping and they're also buying shorts, that's exactly what they're able to do. They're able to move with big size, and they're able to get an overall better price on their entries. So that's what I see happening here. They're buying. They're establishing a decent long position right now. All right. Longs are only 56% of their overall exposure, but I believe we're going to see that build. Okay, because I do think we're going to see a push up here like that. So where is the price going to stop falling and start heading up? Well, we're hitting a weekly 20 EMA, so it could be right here, or ideally it could push lower right here to this area where I have orders to go in long. Why do I have orders to go in long there? Because that's where the institutions have a lot of demand sitting there. So they could push price down there, or they could be starting to fill in their longs right now. So I'm going to be very watchful of this chart, and I'm going to be looking for that momentum shift to happen. If it takes a couple weeks, then I'll be looking at the data to get further confirmation that that's exactly what they're doing, that they're building a long position. And once I see a trade signal present itself, boom, I place my orders and I'm in there, and I'm going to ride momentum to the upside. Alright, so that is the Aussie, US CAD. What do we see? A big drop in longs. 41,000 positions long, dropped to 29,000 positions. Alright, and shorts also dropped, but not as significantly, 75,000 to 69,000. Net effect is short exposure increases from 64% to 70%. So right now there's no doubt that there is a bearish sentiment. Okay. Now I was personally wanting to take a long position here, but at this point it would be somewhat foolish of me to do so, because when I wanted to take a long position down here, but when I examine the COT data and look at the reason for the push up, it's pretty evident that the reason for the push up on the daily chart was because of long positions being closed off. So when longs get closed off, you need sell orders to come in, and that at times will push price up. So so closing off longs down here, causing price to move up, is not a place that I want to buy. If I saw that they were filling in demand here and then price rallied up, then yes, I would want to buy there, because I know that that's where the demand is. So this was a tricky scenario, because you know the monthly trend is down, which means you want to be shorting, but a 3-month area of demand was in control. So the other side of me wants to go long, because I do believe that eventually we'll see a move upwards. But I got to look at the data. I got to be as objective as possible and not let my personal opinions get in the way. So I'm going to cancel that long order that I have down here, and I'm going to wait for price to play out and see what ends up happening. If it does end up coming down here, responding to my zone, and then shooting up, okay, yeah, I was correct. But then I'm going to want to completely understand, why did price move up from that area if that area did not show any demand being filled by the institutions? And I will not stop analyzing until I figure out exactly why that happened. And then I'll apply that knowledge to any future situations that present itself similar to this one. So it won't bother me if I miss out on the trade, because I'll end up learning something from it. Okay, US dollar Swiss franc, what do we see? No change in longs or shorts. And that comes as we consolidated here at this weekly area of demand. So, 69% of their overall exposure is geared to the long side. Net position is still staying at 20,000. Not much to see here. They haven't really done anything. So, I'm just waiting for a potential short here because I think, this monthly area of demand has already been tested. So it's weaker. And I believe we got a push up here. That's a good area of resistance, and that's where this is located. This is a legit weekly supply zone. I think we can get a real nice move to the downside like this. But because the monthly demand is in control, I'm going to be a little bit more safe, and I'm going to play a momentum shift trade to the downside off of that weekly area. If price does get up there, I believe it will, but we'll have to wait and see. On the euro, so here's the profit taking that I was telling you about, right? So we entered into this monthly area of supply with a weekly area of supply nested within it, and I said this is where the institutions are going to start taking profits. So take a look. Long positions dropped from 262, 258, and now 251,000. Okay. Long exposure goes from 69 to 70 back to 69 because you see this change from short positions 117, 109, 110. So taking profits on longs is a good thing here because we were getting aggressive with the long positions. We still have room to add to get into the 80s. So taking some profits, letting price drop, which I think is going to come to around here, possibly even further, and then regroup, regather some more long positions to take price further up. That's what I think is going to happen. That's what I believe is going to happen. I'm not going to assume it's going to happen, but I'm going to sit back and I'm going to watch and I'm going to wait for momentum to shift, and once it does, I'll get in. So here's another thing that I'm going to be doing just to give you a little insight on how I determine when price is going to shift. There's always a chart or a market that is showing their cards a little bit more than any other market. So, we're waiting for these pullbacks to happen in all these charts, and what we could see is gold showing us that the institutions are starting to buy. Okay, like this could happen in a week or 2 months or whatever from now. We could see a clear indication that the institutions are starting to buy, and it could be a lot clearer when looking at the COT data for gold or looking at the charts for gold that this momentum shift is going to happen before any of the other charts. So we could be looking at the data for all the other charts, and we could see that the data is not being very clear on the fact that there's a momentum shift about to happen. But because gold is showing that momentum shift is about to happen, 95% of the times when I see that, the other charts follow suit. And that's how I'm able to have my red flags up on the other charts and be very watchful for those trade signals to happen, because sometimes they happen on very low time frames, and they can happen within the span of 8 to 12 hours. There's a setup, and if you're not there to place your orders, price will leave the train station and you're left behind. So that's always been a good indication for me. So we'll watch. As long as you're watching these videos that I'm doing, you'll follow along with me and learn with me, and we'll see together when momentum shifts, which chart and which market will be giving us the early indication of that. Okay, so that'll be fun to see. All right, so let's go over to the pound US dollar. What do we see? We see profit taking again. Drop from 95,000 to 81,000, and we also see a drop of shorts from 63 to 53. So you can see that there's a theme happening here, right? With all the charts, what seems to be the theme? We see that the bigger time frame trend, the institutions are taking profits, but they're also taking profits, not taking profits, but reducing short or long exposure, the opposite side of their main focus. They're reducing exposure. So why does this happen? Well, this happens because, again, like I pointed out, look at the percentage, right? 60%. There's room to go up to 70 and to 80, right? And you can do that by one of two ways. Either increase your long exposure by a massive amount, or decrease shorts and increase longs by not massive amounts, right? How massive do they want to get? They're already aggressive. How much more aggressive do they want to get? They don't need to be that much more aggressive. All they need to do is reduce their short exposure and increase their longs just by a little bit. And they're well situated. So that's what I see going on here. Obviously the sentiment is bullish. We see net positions of plus 27,000. I think there's a good chance that we see momentum shift right here. Boom, momentum shift, and then a move higher. But I'll be watching the data and I'll be watching the charts for those momentum setups to happen. Wait for the trade signals. Once the trade signal presents itself, I'll be getting on board. Okay, so let's take a look at the US dollar Japanese yen. What do we see here? A drop from 162,000 to 151,000. And we also see a drop from 47,000 to 39,000. So 80% of their overall exposure is geared to the long side. Net positions a positive 112,000. This sucker is just dying to go up. Just dying. I mean, the institutions are so overly exposed to the long side. And it's just crazy because, you know, price is just being pulled down by the US dollar. But it looks like, you know, the second that the US dollar finds some ground, this thing is going to shoot to the moon. And I'm expecting that because we have a 6-month area demand. We have a higher time frame, a very powerful demand area in control, which shot up, is dropping from this area. I was expecting it to drop down to here and then a push higher. It may not happen. It may just hold here. But, you know, there's a very good chance it's going to drop lower, considering the fact that I believe that the US dollar is going to head lower. So, but this has been holding pretty well, just like the US CAD. It's been holding up pretty well considering the drop that the US dollar has been doing. Okay, but definitely the sentiment is bullish. So any shorts, you gotta be very careful. I set up a trade on shorting at the daily supply zone, which worked perfectly. It was a great trade signal that was activated and worked perfectly. And I posted it on my Instagram account, I believe, at forex_guy. That was my Instagram page. I posted up on there, and it's working really well. So, you know, and I'm expecting it to move even further. But I'm being cautious about this one because it's not a guarantee. You know, in my book, it's not a guarantee. Some trades are pretty much guaranteed. This one isn't too much of a guarantee. All right. So last we have the Kiwi. We see no real changes here. Still 53% of their overall exposure is geared to the long side. Net positions positive 3,000. And so what do we see here? We're reacting from a weekly area of supply, just barely touched it, but didn't touch it. A pullback, now we're hitting the top side of this downward trend line, so we can see a momentum shift and a push higher from here. The overall sentiment is neutral at this point, so anything can happen, all right? But they are starting to get aggressive with their long positions. Definitely above average, 29,000 versus 21,000, and look at their short positions, 25,000 versus the average size, 31,000. So indications are saying that price is going to go higher from here. All right, we're at the top of this trend line here, and we are, look at this trend line here, boom, being respected. 20 EMA, 20 EMA, we could see a momentum shift and a push to the upside. All right, guys. So that's pretty much it. I was looking at the news releases coming out this week. There's nothing really special that gets me excited. So it's all about seeing the continuation of the profit taking. That's what I believe is going to happen. So gonna be watching the markets very closely, waiting for those momentum shifts to happen, and that'll be it. Patience. Just sit back, relax. We know what to watch for, and I'm going to be waiting for the trade signals to present themselves, and when they do, I'll place my orders, and that's it. That's all there is to it. Alright guys, I hope this video was helpful for you and your trading. Take it easy, don't rush into any trades, think smart, play smart, trade smart, okay? And we'll see you next week.